Thank you for being here. It's very encouraging to see quite a number of you guys dialing ahead of time, right? I think this is probably one of our events where we have so many people in the waiting room waiting to be admitted. So thank you so much for being on time. Actually, thank you very much for being ahead of time. You guys are here probably today because you are part of our TBN Asia ecosystem, or you were probably referred to us from one of our 4 community partners, whether is it Magic, YCAP, Singapore International Foundation, or Race Singapore. Okay, so thank you very much for being here on time and ahead of time. Before we start, in a room like this, normally we would really like to know where are you guys from. We do see a couple of unfamiliar names here, and we will be expecting to see more in moments to come. So we will just quickly pop a poll to kind of understand where are you guys from, and which area, which geography you're from, and how do you hear about this event. Okay, let's leave this here for a bit. We will leave the poll open, so giving everyone a couple of moments just to fill up 3 questions. All right, we have a good mix of answers. Okay, I'm just going to leave this running. For those of you guys who are not as familiar with TBN Asia, I thought I'll just give a very quick introduction. We are a non-profit focused on fighting poverty through enterprise. We try to offer a high-touch ecosystem approach to supporting social entrepreneurs in Southeast Asia. And our values are collaboration, empowerment, dignity, hope, and restoration. And we try to do this through 4 pillars. So when we say an ecosystems approach, we really are intentional in engaging partners, in engaging different stakeholders to make this happen. So we have the Social Enterprise Training Hub, of which I personally lead. Then we have the Investors Network, where we try to engage the investors in the ecosystem of the right DNA to invest in the social enterprises. Expertise Network, where we rope in folks from all around, those who may not already be engaged in the impact ecosystem, and invite you to join us. So this is a expert skills volunteering initiative. And to support all of that, we have community development, where we engage all our stakeholders through events, webinars, conferences. So this is actually one of them. So a very good evening once again. My name is Wayne Chia, and I'm the lead for this Social Enterprise Training Hub pillar of TBN Asia. Now, the SETH program is a program that we have put together to help social impact entrepreneurs to gear their business towards investment readiness. Now, we believe that amongst all social enterprises, there are some who are a lot more promising. They are really ready to scale up their impact and their business, but they are having a couple of roadblocks. And this program is actually here to help them, right? So we are very proud to say that we do have a couple of folks who are in the program today dialing in, and we like to believe that we have more that will be interested to learn more and to join for future cohorts. So I'm going to leave this. I'm going to be talking more about the SETH program at the end of this session, so stay tuned. But let's jump into our exciting program for today. So without further ado, allow me to introduce our lovely facilitator, Wen.
Hi everyone, thank you for joining us, and we're just really excited to have so many people in the room. From my screen, I can see there's 51 people, and so just thank you for giving us this hour. And we really hope that it will be insightful. We've got 2 great impact investors in the room, and we're gonna make it as interactive as possible. So I see Ryan already putting hi Wayne and the team. So please feel free to use the chat group. And I think even throughout the session, if you guys have insights or some, like a thought, please put it in there, but do not put your questions in the chat box. We actually have a Slido. So the Slido code is coming up right now. Please open up a browser or take your phone out and QR code this. And so, I mean, if you haven't used Slido, I think most people have. Basically, you just type in your question. Now, if somebody else types in a similar, or, you know, it's a question that you have in your mind, you can upvote the question. So we want to do it this way, as today is a very short session, which means that we want to get to the questions that most people have. So you might actually ask a question really early on, and we actually may cover it during the session. So then we will skip through that in Q&A. So just to let you know, just a very quick run through, we'll have 10 minutes each person with Jian and Mason kind of sharing, and then we'll just go straight into Q&A. So we want to reserve as much time as possible for the Q&A session. So we have, like I said, Mason and Jen. So Mason is the head of Garden Impact Fund, and he has been an impact investor for the last 7 years based in Singapore. And Jen has started her impact investing journey as an investor herself. And it's really exciting to have her based in Malaysia and just also investing into education and healthcare. So without further ado, we're going to go straight into it. So maybe we'll start with Jen. Jen, do you want to say a couple of words just about what you do, what your focus, and how's it been like being an impact investor?
Right. Hi, everyone. I'm Jen from Citrine Capital. So Citrine Capital basically functions exactly like a for-profit venture capitalist firm. But not only do we want profits, we also want positive societal impact. We look particularly into education and healthcare. That's where we actually did some in-depth research on what's going on the ground, what's the value chain within the two industries, and thus we have got our own sets of a long list of problems to solve within the industries. So whatever startups that we invest in will have to contribute to solving those problems in one way or another. So I guess that's a nutshell of what Citrine does. As for my journey as an impact investor, it has been interesting to meet a lot of social entrepreneurs who come up with various different business models, or even sometimes non-profit organizations who wants to transform their revenue generation model to become sustainable themselves, or even normal businesses who may not have impact from the onset, but later on want to integrate impact aspects of things into their business models. So it has been really exciting to kind of hear their stories, find out about their ideas, and perhaps walk through the journey with them once we have invested in them. Yeah.
Great. Thanks, Jen. And Mason, do you just want to say a couple of things just about your impact investment journey and where you're at now?
Sure. Thanks, man, and thanks, Jen, for sharing your journey. For me, I became an impact investor 7 years ago after what I consider as being a disillusioned professional. Working in my background is I'm an accountant by training, and I've been professional and entrepreneur for about 20 years. And then I started to embark on this more fulfilling so-called purpose-driven impact investing back in year 2013. So, I mean, honestly, time flies. I can't believe I'm doing this for the last 7 years, but I can assure you it has been very fulfilling. It's been fulfilling in the sense that you're not just helping yourself, but you're also helping others. I think this is what we have been doing. So Garden Impact focus is actually in Southeast Asia. We have made investments in Thailand, Malaysia, Singapore, as well as Indonesia. We hope to expand into so-called new markets like in the Indo-China market, as well as the Philippines or even Timor-Leste, if there are suitable opportunities. I will stop here. Thank you.
Thank you. So we're going to do 5 common mistakes that social entrepreneurs kind of make when looking for investment. So we'll start with Jen. Give us the number 1 mistake that you've seen, but also give us tips about what actually, how do you advise them to not make this mistake, and what are you looking for as an impact investor?
Right. I would suppose the very common mistakes among social entrepreneurs is that they make things really complicated. So I would actually prefer it if they were to keep it simple, at least at the beginning, when they have a clearer picture of what they wanted to do. So while I understand the impact often requires systemic change, so there's so many components, it's so multidimensional, cutting across various different components within the industry itself. So, but it may be confusing when you're trying to pitch it to your investors, like, oh, I want to do this, I want to do that. There are so many causes of a problem that you want to solve, and you usually just want to pick one particular one to start with, at least. And then if you want to add on afterwards, that's fine. But you can't basically do everything at one go. So I've heard of a lot of entrepreneurs who wants to do A to Z. They're very passionate. I want to solve this problem. I've got this idea. I've got that idea. And but they end up being neither here or there. So I'm not trying to reduce this into a typical supermassive hacking, scaling growth strategy where you have one thing and you sell it across the globe and whatnot. Because like I said, social problems are by nature very dimensional, multidimensional. So it's actually okay to dream big, but have a roadmap along the way to kind of know what milestones to hit across the years, so to say, so then you can actually achieve a bigger impact or even scale your business in a more systematic way rather than from the onset, I want to do everything. So yeah, start with a very simple value add offering and then build from there and pivot accordingly as you see fit. But like I said, keep it really simple. Make it clear to us what exactly are you solving and what is your organizational meaning of impact and how do you achieve such a thing through your business model. So what products or services are you offering and what value adding are you, what value are you adding to your stakeholders and shareholders? We're shareholders at the end of the day. So it's a holistic way of thinking of it. So this will make it much easier for us to digest what you're trying to say to us. Yeah, so keep it simple, I guess.
Love it. That it will definitely stick in everyone's head. Keep it simple. So Mason, give us one of your top mistakes that you've seen.
Yeah, I noticed that many social entrepreneurs, when they present their pitch to us, they try to present it as if they know everything, know it all. And I think that is, to me, that is kind of very dangerous in terms of, when it is all right to say that you may not know everything, but at least you know what you need to know. Oftentimes, this is where I think how the investors would like to be able to help you to cover your so-called weaknesses or your limitation. Because if you know everything, then what is the purpose of the investor coming in? So I think that is where I think we need to learn to, the presenters must learn to say, okay, my strength is this, but, and I'm not very good at numbers, for example. Then the investor will say, okay, maybe there's something that we can come in and help you. So I think just be truthful, just be transparent, and don't try to say you know everything. That's one common thing that I've seen.
Great.
Thank you.
So it seems like, when they're looking for capital and money, but actually as impact investors, you want to provide more than just capital. You want to be able to come alongside the entrepreneur and help them through and bring your networks through to help them in different parts. So that's also a really, really good tip in terms of, when you're looking for investment, don't just think what you need financially, but also how can you leverage and get the team to help you, your investors to help you. Yeah. Okay, over to you. Oh, actually, Mason, let's stick with you. Another one.
Okay. When the social entrepreneurs present the so-called forecast or even the future outlook, this is especially when during the later due diligence stage, they sometimes become too optimistic, overly optimistic in their forecasts, and become really pressurizing. I think the last thing that one investor want to hear is you overpromise and later you underdeliver. We rather you underpromise and overdeliver. This is something very important. In order to manage the investors' expectations, you can prepare two sets of forecasts. In terms of one is so-called optimistic. Yes, we all want to be optimistic, But very importantly is also what I call the conservative forecast. Don't overpromise and then you cannot deliver. Investors would like to be play safe, meaning that I put in so much of money, I want to make sure how long it lasts, and that's all. You don't want to go back to investor, hey, I need more money, and then the investor will drop off the chair. Hey, no, this is not what you said. So I think it's better to be realistic, and of course have to be conservative. And while in the meantime, you must have some hope presenting upside. What is the potential of the business?
Great, thank you. Very practical. For those who have joined us, and I've noticed that there's still people joining us, we have a Slido open. So if you go into the chat group, you'll see the Slido link. So if you have any questions, please put it into Slido. We've got 2 questions in there now, and there's plenty of time to do Q&A. So please put your questions in, upvote the questions that you've seen come up that you think that you're wanting answered as well. Yeah, please open the browser and put it in. And so now, okay, so to recap, the first one was keep it simple. The second one from Mason was don't claim to know it all. So be open, authentic, and yeah, about what parts and what help you need. So the third one from Mason again is be realistic, optimistic but realistic when you're putting out forecasts and all that. And I guess Mason was saying, as an impact investor, or actually any investor, the last thing you want to hear is for your investees to come back very quickly and say, I've run out of cash, we need more investment. So very, very practical tips. Maybe we'll go back to Jen now. Maybe you can give us a fourth.
Yeah. Just quickly, another common mistake of entrepreneurs is that they think they have to compromise on either the financial or the impact side of their impact ventures. Impact ventures, mission-led enterprise, mission-driven social enterprise. There's just so many terms around this these days. So for instance, there's a lot of enterprises who use the make and give. So I make this much, I'm going to give X% of my profit towards this charity cause or whatnot. That's how things used to be done previously. But for me, I believe that to create a truly mission-driven company is that you have impact embedded within your business model from the onset. And so there's no such need to balance between the both. You don't have to sacrifice certain financial components of the company just so you can achieve bigger impact. So if you were to think of it, there are many different business models of how a social enterprise can work, but pick one in which I prefer to invest in those as well, those that have impact directly embedded into the business model. So then there's no conflict within yourself to pick either or, because they grow together. Your business grow if your beneficiaries is your clients, your business grow, your sales grow, your revenue grow, your impact will grow organically at the same time as well. So I personally do believe that these two objectives can be integrated into the same business model. Yeah. Right. But I see a lot of social entrepreneurs struggle, like, oh, maybe if I get to save this bit of money, then I can create more impact, or I got to build my business model first, then I think about making impact afterwards. Yeah.
Okay. And do you have any example of kind of like the best case or what you're looking for in terms of a social enterprise model? Do you have a specific example?
Well, like I said, the business model that I prefer will be the ones that has impact embedded within them. So to give you an example, one of our investee companies, Thoughtful. So it's a mental health technology company. So what that does is provide accessible and affordable mental health services to just anyone, because anyone is prone to having mental illness at some stage in their life, be it me or you. It can just be anyone, literally. So so basically, if you were to think of it, if I'm a subscriber, I'm a user, I can come from rural areas or urban areas, whatever, then I pay for your services, but I'm the beneficiary of your services as well. So if you can think of it, if there are more users, there are more people paying for my services, then there is obviously more impact created towards the same users. So your clients is essentially your beneficiaries. So that is one example. But again, there's so many different types of business model of how a social entrepreneur can use to kind of realize their mission. And this is one example that it really depends on how innovative and how well the social entrepreneur understand the problem that they're trying to solve and come up with a solution that is suitable. Yeah.
Great, thank you. We're flying through this. We're going to have so much time for Q&A. Okay, Mason, the last tip. So this is the fifth one.
Yep. I noticed that many social entrepreneurs, when they are being asked a question like, who are your competitors? And they always proclaim that, oh, I don't have any competitor. To me, that is something shows the weaknesses, meaning that you never really done your study on the competitors landscape. I don't, there's no such thing as no competitor. You by forcing you to look at the competitors landscape, it will help you to really look at how to differentiate your product, your service, or even your solution. Because honestly, no investors want to invest in copycat. They want to invest in something that is a unique offering, that has unique proposition. And the only way that you can make your own product solution unique is by comparing it to your competitors. So I think that is something that many social entrepreneurs have not done enough homework to present the so-called the competitive landscape of the kind of service or products they are making. So that's one thing. Thank you.
Yeah, great. And I think I guess what you're saying is like, what is your USP? And so, and also when during our rehearsal, actually, we're talking about, competitors. Sometimes it's not what you think as, another company doing similar things. Like Netflix's competitor is sleep. So it's actually what are the kind of the competing kind of attention that the people that you're trying to help or the people that you're engaged with may also divert their attention to. So then how do you get them on board? How do you acquire these customers? Which if your model, like Jen said, is embedded in there, is that how do you really kind of bridge and get through to your end user quickly and to get them into your system. So I guess well, we really flew through that. I thought it would take longer, but that's great. It just means that we have more time for Q&A. So we'll go straight into Q&A. Please keep putting the questions up. Okay, so the first one, which has got 3 votes, is what is the expected returns, IRR, for impact investors and over what time frame? So if Jen and Mason, you can both just take yourself off mute. Either one, you can just put up your hand or just start speaking. That would be great.
Mason, I'll leave this to you.
That counted.
Oh, a very typical question.
Difficult question. Okay. Usually, impact investors are what I call patient capital investor. And usually the investment period that we're looking at social enterprises is between 5 to 7 years. And that means our investors' fund life is about 9 to 10 years time. Therefore, you allow the exit period about between 5 to 7 years. In terms of return, it depends on what kind of risk level. It depends on what kind of growth stage are you at? Are you at the early revenue generating stage, or are you at even pre-IPO stage? So of course, the earlier that you went into the company, an investor went into the company, the higher risk of return that they were looking at. Overall, based on current market, the hurdle rate of return that we're looking at is 5% per annum in US dollar term. So we want to look at each country have different currency risk, different political risk, and so it's not going to be a generic answer for every industry or every country. So we have to assess on case by case basis. But that is overall nutshell that what Garden Impact Fund is looking at.
Great, thank you. So Jian, for your investment, kind of what were you looking for in terms of return?
Risk-adjusted market returns, honestly. But in terms of the time frame, because we are structured as an investment holding firm, it's a different type of structure, legal structure, than a fund per se, according to Malaysian legal laws. So then we are flexible in a way because we realize that impact does actually take quite a long time to kind of present itself. So we would like to maintain the flexibility. We don't have to, for example, write you off at the end of our 7 years, for example. Yeah, so we try to keep it flexible, but obviously the sooner the better, because that's how we build case studies to kind of convince more people, hey, please provide more capital for us to invest in all these impactful startups. Yeah.
Great, thank you. Okay, from Sharizel, I hope I pronounced your name right. Your question is, in the startup phase, how patient are social impact investors to cross the valley of death together with the entrepreneurs? How long is this phase? How long does it usually last? Okay, have you been through that phase yet? Or are you still in it, Jian?
Oh, for me and my fund. For
them.
them.
Crossing the valley of death. So there's that period where the grind's tough and it's not working, and to that point. So what do you reckon?
I don't think we can put a number to how long is that phrase. That's usually the entire phrase of you running the enterprise. Any minute, something can go wrong, and you gotta solve it right away. And but obviously, the most dangerous part is at the beginning, where you're still trying and arrowing your business model, whether it works or not, whether you have achieved the right product market fit. But there's really no time frame to that. But obviously, we do not want to invest in social enterprises that is in that phase for way too long, because then they're just remaining stagnant. They don't grow. But we want to invest in something that is scalable, that is fitted to grow. So yeah, I wouldn't put a number on the duration of a valley of death. So even if you have gone through the valley of death, there will still be so many other problems for you to solve. And it depends again, then, is it good problems or bad problems to solve? If it's good problems to solve, then I think you're okay, you're in a good place. If it's bad problems to solve, then just solve it.
Yeah.
Yeah.
Mason, what's your opinion on this?
Well, my take is that instead of looking at period, there are a couple of things that we will look at. Number one is we need to look at the credibility and the execution capability of the management team. Because generally investors do not want so-called to put good money after bad money. And if we want to fail, we want to fail early. Of course, we, again, so, we have failed, but, you want to fail, you fail early, don't fail when it's like, oh, I should have or cut loss long time ago. So I think it is very important for the social entrepreneur to demonstrate that they have the capability, and when I talk about capability, it's not just about technical execution. It's about the passion to make things happen, to overcome the hurdle, despite, and of course, we must believe in your vision. We as investors, most of my investors are so-called seasoned serial investors or even experienced entrepreneurs. They know what it takes to make it work, and it's that drive, it is that passion that if you need to make a personal sacrifice to make it happen, then make it happen. That is the kind of thing that we're looking at, not just saying, oh, after 3 years we cut loss. There's no such thing. We want to say that, okay, can we trust these social entrepreneurs to overcome that hurdle? The hurdle is not just financial hurdle, but a lot of time it's mental hurdle and emotional hurdle. You really make it work.
Great, thank you. Lots of nuggets of wisdom there. Next question from Anonymous. When should we borrow debt and when should we sell equity? At which stage? So is it a cash flow positive profit when you're profitable or when you're sufficiently scaled? Mason, maybe you can go on this one.
Okay, that is a very good question. Generally, for early stage company, from an investor perspective, because the company is early stage, you do not generate enough cash flow. And it means it's very hard to service the debt, the liabilities. When you talk about debt, you need to make sure that you can service the debt either monthly, quarterly, or even annually. When your business not doing well and you cannot service the debt, there is the so-called the default covenant. When you reach a default covenant, I can tell you, it is very ugly. We get lawyers involved, we get all the demand letters involved. I tell you, I don't want to get into that scenario. This is why, but on the other hand, we also realize that when the company so-called equity or capital base is too low, and when you start borrowing, your debt equity ratio become crazy, and it is unhealthy. And when you have use up your so-called reasonable debt equity ratio, the future borrowing is going to cost you more because they know the risk of default is high. And therefore, when you become overly debt and you become technically what we call bankrupt, and nobody want to be involved in that. Nobody investors want to be part of a bankrupt company. Trust me. But again, there must be a balance, a healthy equity balance of debt and equity. So don't shun yourself away. Oh, I only want to do debt. I don't want to do equity. So that's my advice at the moment.
Okay, Jen, any views?
Yeah, I'll try not to scare them away. Lawyers, bankruptcy. So basically, debt, equity, convertibles, it really depends on the stage of your company, where you are at. If you were to imagine the life cycle of a business, if you're just starting out, know that you probably get it from angel investors, your friends and family, whatnot. There are also a lot of grants out there when you're starting out. There's nothing wrong with utilizing the grants out there for an impactful mission of yours. And then afterwards, you most likely come across VCs that pre-seed, seed, pre-seed A, Series B, C, D. There are more and more stages. They just keep adding. It used to be only Series A. So then maybe later on, then you move into debt when you have a bit more positivity in your cash flow, and then that's when you plan accordingly. So there are different people or institutions with capital along the whole life cycle of a business, be it debt or equity, but know exactly how much do you need at that point in time of your business and what instrument is most suitable then and there. Then you decide. Yeah, but maybe not have a fixed mindset, oh, I'll never do that because it comes with interest, or oh, I will only do equity because I'm a startup. So it really depends on why you need the money and where you are at, and then pick an instrument, talk to your investors about it. And then usually investors do convertibles, the debt to a certain extent, and equity, usually equity, most of the VCs. And then I'm sure you guys will meet midway of what sort of instruments is most suitable.
Yeah. I think actually from what I've seen is that the investors want to know what you're using the money for. Yeah. And they'll probably advise you whether that is the right instrument as well. And so like they want to know, like no, not down to the cent breakdown, but with that money you're trying to raise, like what exactly do you want to use it for? And are you asking too much? Sometimes they're like, do you really need that much? Or sometimes actually there's situations where they're like, are you sure that's all you need? Because the investor has seen before that actually to get through to the next phase, that's actually too little. So, I mean, from what I've seen, it's actually just to ask and have that open conversation, because the potential investor can give you a bit of guidance as well as to what to go for. Actually, I think there was on this, I might just skip to this one because it's kind of on the investor. How do you know if an investor is the right investor? Oh, how do you know?
Oh, I think this question is for social entrepreneurs, not for investors.
Or maybe a good example of how, like for you guys as investors, how do you know it's the right SE that you to invest in? Like as in, you see a lot of decks come through your table. So what is it that you're looking for? Maybe I'll change the question that way.
Shall I let Jian go ahead first?
Okay. So we use Jian Li. Sorry, the question was?
So basically, what are you looking for, like in terms of a fit, in terms from an investor relationship? Yeah.
Okay. Well, to be very honest with you, because I myself is embarking on an impact investment journey myself, so I am kind of startup-ish too. So I would like to think of us as more partnership. I'll provide you with something, you provide me with something else. You will help me build that successful case studies for me to convince my LPs that, hey, look, my impactful startup is doing well, so I need that from you. Well, you perhaps need capital from me at some point. Well, that's the whole investment about. And also perhaps some networks and here and there. So I would like to think of it as a partnership. So not only do we pick them, they have to pick us too, in a way, because different investors will be able to bring you certain benefits. Yeah, so it's give and take, and yeah, do pick your investors properly though.
Mason?
That's a good comment, Jen. Pick your right investors. For me, I like to pick social entrepreneurs that are very clear about their vision and who have a very strong passion. I think I spoke about that passion element earlier, because oftentimes, like even now, COVID-19, it is tough. It is tough in terms of market potential could have evaporated. But it requires a passion and grit to stay through the cycle. This cycle of up and down. I mean, every business has this up and down, and only passion can help you to sustain through the up and downs in life. Because many young social entrepreneurs, I must say that, underestimate the hardship of holding on the fort to go through difficult times. I mean, that's a question I often ask the social entrepreneurs about the family. It's not because I'm trying to be very so-called, violating their privacy, but more of like, because when a social entrepreneurs have young family to feed, I'm going to ask them, can you take the kind of low pay for the next 5 years to sustain through? Because some of them have growing up children, young kids, and maybe the spouse is not working. So the burden of that social entrepreneurs become the sole breadwinner is very heavy. And, I would be very upfront, say, hey, are you sure this is what you want to do? The last thing you want is give up midway. It's very sad, not just to me, but to your employees, the people who have been working for you. So I think I like to work with social entrepreneurs who are practical, who are, really to say, okay, honor the word, able to fulfill what they promised to the investors. That's something very, very important to me.
Yeah, great.
Thank you.
I think that's actually answered the next question, but I'll read it out anyway. The question was, what works well for social enterprises under your portfolios, their business model, which I think we spoke a little bit about before, but the founders' personalities, which you've just spoken about, and their impact as well. So I think we might just skip through that one and go to the next one, which is also kind of semi-related. Can you give some examples of the most successful social enterprise business models you've seen? Mason?
Wow, that's $1 million question.
Come on.
Successful social impact enterprises
Models, yeah. What's the most
model.
thing today?
Well, I think it depends on what your impact investors are looking at. So for garden impact, our investors are more interested in positive social impact returns than financial returns. That doesn't mean we don't want positive financial return. We still want positive financial return. The only thing is that, they just want to see what Garden Impact Fund invests is going to be something that can create legacy, that can create something that they are proud to talk about. So some of our portfolio companies, one of them, as you probably know, is the Agape Contact Center inside the men's and women's prison cluster. Over the last 5 years of investment, we have impacted over 600 Asians, and is continuing to impact to help to lift them out of their so-called poverty and become employable and become, have equipped with skill sets in it. We are also looking at we have an investment in Indonesia that engage cassava farmers by using their cassava tapioca to convert into so-called biodegradable, biocompostable plastic packaging. We have been journey with them for the last about 4 years already, and they are in the midst of changing a leading instant noodle manufacturer packaging to become biodegradable. What is that is not just bringing positive environmental return in terms of reducing plastic waste, but by doing that, we are creating more employment income, more employment opportunities for the farmers. Just in case you're not aware of, before COVID-19, at least 60% of the Indonesian farmers borrow from loan sharks. And can you imagine this COVID-19 is probably increased up to 70 to 80% because no banks or no financial institution is willing to lend to the farmers who do not have regular income, who do not have like pay slip like us. We can go to the bank and get a credit card. So I think more and more farmers and their family members are going through a more difficult time now. So I think we need to find ways to channel to employ them in terms of giving them how to give them a livelihood income. Thank you.
Great. Jian?
I wouldn't, well, it's going to get philosophical, but it really depends on how you define success for a social entrepreneur. What's different between a social enterprise and a normal enterprise is that a social enterprise usually have their theory of change, their logic model. So if you have that from the onset, well, you can change it every now and then. It's better to review it annually, actually. Is that you're very clear what sort of inputs are you putting in, what sort of activities are you conducting through your business model, perhaps, and then what sort of output and outcomes and eventually impact. And that impact is one of the criteria of success, I would imagine, for a social entrepreneur. But obviously the financial bit as well, because that's what your shareholders are after. Impact to your stakeholders, to your beneficiaries, finances for your shareholders and yourself and your employees. Do you find meaning in doing the work that you're doing? So there are many stakeholders of your venture, and then I would imagine success means different things to different stakeholders around your venture. So be clear on what's all of those, and that's where your logic model or your theory of change comes in place. So then you also prevents you from mission driven. So that's that. That's the most successful enterprise, I would imagine, because at the end of the day, we'll never be satisfied. That's human nature. But as long as you know what you want to achieve and you get there, I think that's good. Yeah.
Fantastic. Thank you. That was a lot in there. which is great. I think, oh, just to let you know, this is being recorded. So if you guys want to get back into it and just re-listen, actually, I just felt like there were just so many great bits all packed in that last like 20 seconds. So thank you so much, Jen. Now, I think maybe I'm going to give a go at answering this one. Do you have an inspirational story or social enterprises that can be role models for many of us to follow? I know at TBN, we absolutely love Daniel Flynn at Thank You. So, I mean, their impact and what they're doing, they're based out of Australia, but their impact is around the world. I think on our videos, you can actually see the session, I think, with Daniel Flynn. So I would say that even during SETH, when Daniel came to speak, the entrepreneurs loved all the tips and just the advice that he gave. But I think if anything, the most kind of like role models to follow are probably the most innovative, but I think what Daniel's done, he's very innovative in a traditional business model. So he's doing marketing very differently. He's looking at impact in a different way as well. And to use a traditional model and turn that around, just like what Jen was saying, is that, you know, it's a business, but it has a core social mission as well. But now I think what we're going to do is go into the numbers and like, what do you actually do when you fundraise? So then I might start with a bottom one first. So Mason, what should entrepreneurs do 6 to 12 months before fundraising? Should they start to meet potential investors to build relationship or make friends first? So very practical question.
Yeah.
Mason?
I would say make friends first. Here is the reality. Even the impact investors need at least 3 to 6 months to prepare their homework. You know, we need to do our own due diligence, need to do our own feasibility study about the industry, about your business before we can extend a loan. So, you know, you don't expect that, oh, Mason, I need the money next week. I said, no way, I can't give you the money. You know, we need at least 3 to 6 months of time to prepare, to make sure we prepare a proper investment paper. You know, so I'm speaking on behalf from a very fun approach, because we are managing different investors' money, and we have a very strict investment committee, a cycle that we need to go through. So that does not mean, you know, everyone is the same. If your investor is a single family office, then it could be a very different story. So I don't know, about maybe that Chen can share that, because she's much easier outfit structure than mine.
Oh, yeah.
It's super easy just to ask Jen for money.
No. But I do agree, make friends first, 6 to 12 months before fundraising, because fundraising, it's in itself a role and it's very time consuming. You got to prepare your data room, you got to do homework on your various different investors, who to talk to, who not to talk to, how much do you need. So it's actually a full-time job for the entrepreneurs themselves too, fundraising. So but yeah, make friends first. Don't go pitching to them before you know what you want, how much you want, and what are the different terms underneath it. But it's obviously okay to approach them first to kind of just get a hang whether they fit into, say, for example, I only look into education and healthcare. So if you're coming to me with an environmental proposal, that might be misaligned to what I'm looking at. So you might want to save some time on that too. Unless you want advice or you want comments, feedback from whoever that you can get a hold on, then that's fine. Yeah.
Great, thank you. Mason, did you want to add something, or can I go to the next one?
Yeah, maybe I can add on something. You know, I know many social entrepreneurs write to people like me, you know, and I just simply cannot reply every email. But don't give up, keep writing, you know, until I reply. So I think that's one thing. Sometimes and I will only reply when it is time for us really to meet you. I think so. But again, you know, don't give up. I mean, if at least give us an update of what you're doing, at least 2-3 months, you know, some of the progress that you are made, you know, just like you know, I'm not asking you to write me a love letter, but at least, you know, write something about what's happening, you know, what positive progress that have you made? I think that's what excites us. We want to see that you are very serious about your business, you're very passionate about your business, and we want to make sure that you're making progress. And when come the right time, trust me, if we want to invest in you, we will reply. But otherwise, don't stop writing.
Great. Okay, we are at 5:50 and there's some still really, really great questions. I'm just trying to quickly have a look. And you know what it is? If they're really for these questions, right? I mean, we're happy to come back and actually maybe keep it for a next session. So these questions definitely are not wasted. So maybe I'll just do one last one because it's a good segue to actually the next section. So do we need to go through a social entrepreneurship training program before you consider us? So maybe what's your thoughts on, I mean, it could be any accelerator program or incubation program. But maybe as an impact investor, you kind of share what good things you've seen or, benefits of doing such programs. And is that a prerequisite? Jen?
Yeah, maybe I'll go first. Again, it depends on what the value it's going to bring to you when you participate in a social entrepreneurship training program, or even just any startup training program there is. If by being in it, you get to meet like-minded people, you get some sales lead, you get some know-how in doing a business model canvas, whatnot, and network here and there, investors network, then yes, when you're starting up, yes, do go for it. But I've seen a lot of social entrepreneurs who join one program after another. So they're too busy joining programs rather than focusing on building their startup itself. So I would say pick a good one, a suitable one, and then, milk from it. Get whatever you can out of it, and then really focus on building your startup, because usually this training program is intensive, so you want to make sure you get most out of it. Yes.
Great. Mason?
A quick answer is no. If you think that to meet potential investor, you have to go through accelerators or venture building like SETH. No, I think it would not be necessary for you to have to go through the accelerators or incubators. But I think accelerators and incubators are good for social entrepreneurs in the sense that it helps you to widen your understanding of what is needed for a social entrepreneur. I mean, I think earlier we talked about, being a social enterprise, you involve more than just investor. You need many other stakeholders like, you need mentors, you need coaches, you need sales leads. Investors cannot bring you all the sales leads that you need. Investors can only bring you, the network that we already have. So this is why I said the benefit for a social entrepreneur to go through accelerators and venture building is there. But like what Jian say, don't make like attending incubators, accelerators a full-time job. Or even join all this competition all the time. They make me worry in terms of if winning the prize money is your only source of revenue, you need to go out and really go and clock serious business recurring revenue is more important. Thank you.
Right. I think that's a really great end to the Q&A. We're sorry that we couldn't go through all of this, but definitely we're going to keep on this. And maybe actually write on the comments if you guys want another session. If you found this helpful, please give us feedback, because I think these sessions, we at TBN really want to do our best to serve the social impact community, the social entrepreneurs out there. So if you find this session really helpful, please let us know, and maybe we could do one later on this year again. So I think without further ado, I firstly want to thank Jian and Mason for their time, for sharing so open and honestly. And please, I think if you want to get in touch with them, we at TBN have just asked that if you just write into us first, and then we can link up as well. And that way it's more for us as well to gather data about who is wanting to connect with who, what questions do you have, so that, and I think for us it's that, getting really efficient and having extra mileage, because if we have lots of people with the same kind of request, then maybe we can do something about this as a group. And like Mason said, he's got a million emails to answer. So then you may not hear a reply for a little while. So please just email us through at info@tbn.asia. And so now I'm just going to pass the time back to Wayne, and he's going to talk a bit about the SETH program that's coming up and the launch of Cohort 3.
Thank you so much, Wen, and our esteemed panel. Thank you, Mason, and thank you, Jian. Before I actually go into talk about a little bit more about SETH, I think there were a couple of questions where some of the folks are asking, how do I join a like-minded community of investors, or how do I get started in my impact investment journey? What would be your answer to that? I'm just curious.
So actually, part of the Investors Network, we are looking at all the different ways of engaging new impact investors. So just keep your eyes peeled. We'll be in touch very soon, because I think what we've realized is that there are people wanting to go to impact investing, but the kind of whether it's a 101, it's a 201 or 301, and what's the profile of people, and kind of how can we then plug the knowledge gaps as well. So there is still, we're kind of doing our work behind the scenes just to see where people are at, so that we don't provide one solution and then people get lost along the journey and get too intimidated to want to do it. Keep your eyes peeled, and we'll be back with more information about the Investors Network at TBN.
Okay, thank you very much. Okay, so we are back to talk a little bit more. Just give me 5 minutes to talk a little bit more about the SETH program. Okay, as the name suggests, it's the Social Enterprise Training Hub, the acronym. But if I have a chance to rename it, I will call it Social Enterprise Investment Readiness. Okay, because this program is very often mistaken as an accelerator or an incubator program, which we have been very intentional to say we are not, because we have that fear that this becomes one of those launch pads where entrepreneurs go from program to program, right? I completely can empathize with that. I've seen plenty of those. So what we are trying to do is we are trying to help social enterprises that already have quite a bit of momentum to help them with their investment readiness program. As what Mason has said, that you do take 6 to 9 months to make friends with investors, right? So this program potentially could help you accelerate that process a little bit, because we are all about investment readiness. Okay, let me just talk really quickly about some high-level stuff. Let's begin with the end in mind. What's the goal? We want to be able to mobilize $1.5 million USD through this network, this community, so that we can generate 500 new jobs to help 100,000 low-income people through the social enterprises that we are supporting. But most importantly, we want to be able to build a more vibrant social entrepreneurship ecosystem. Okay, and hence this program, because we realize that there are quite a number of really good, promising social enterprises. They have their prototype, they've gone through maybe even an incubation or accelerated program, and now they are trying to raise their first external or institutional round, the one that is not from family and friends or fools, right? And then they get stuck. They are not quite sure why exactly is it, what investors are looking for, why are things not moving, and hence this is why we have this program here to help you with that. Okay, so I won't go into too much details here, because it is a 6 months program where we go into a bit more details, and then we do try to help you with your pitch and put you in front of prospective investors. Okay, so what's the curriculum about? I will go into a bit of details, but not now. Okay, so one thing that's a bit unique about SETH is, in as much as we are talking about helping the social enterprise, we realize first and foremost, it is about the entrepreneurs. Because a social enterprise, as what Mason has shared, is pretty much as good as the entrepreneurs behind them. Okay, so we do spend quite a fair bit of our time with the entrepreneurs, trying to reinvigorate them, because these guys may have been around for 3 to 5 years. They could be getting a little bit tired. They need re-inspiration. Of course, the standard business and financial modeling, we go into your strategy, but we do have a lot of focus on the investment pitch. So I mentioned very briefly, who are we looking for? What are the kind of social enterprises that we are trying to support? Well, we do hope that you have been around for about 3 years and definitely post revenue. In other words, you have a product or a service that people are already paying for. And of course, you are serious about seeking external investments. You are not just here for another educational program, because there are plenty of other such programs that are just as good and probably less intense, right? So these are for social enterprises who are actually serious, who want to raise money. Where are we looking in terms of the region? Well, we are looking at companies who are in the ASEAN region, okay? If your company is serving in these eight countries, we'd like to speak to you. There's also some question to say, what if I'm not in this country, in these countries, but I am serving this market? Well, that will be interesting as well for our consideration. So speak to us. We would also like to understand more about your business. Well, for a small team like us, we try to remain focused. So as far as focus areas, the nature of a business, we look at 4 areas: agriculture and food, water and energy, affordable and accessible healthcare, and last but not least, commerce and service. Okay, so that's all I have to say. I just want to let everyone know that Cohort 3 registration is open. Okay, so if you're a social enterprise that finds that's exactly what we are talking about, you are in the right region, you're in the right stage, you are just about to raise funds, and you're trying to figure out how do you get started on this entire process. Well, we want to speak to you. Our registration is officially open, and we will start our run in April. So if you're interested to find out more, I will be staying back to address some of your further questions, as well as go to a bit more details if you're interested. If you're not a social entrepreneur or social enterprise, but you know of someone who may find this program useful, we would greatly appreciate if you could just also fill out the poll that is just popped out, and you tell us you're interested. We will follow up with you and forward you the necessary information. Most of our information will also be available on our website. You can just go to the TBN website under the session. So thank you very much. We love to have you with us. Do fill out our exit polls. And if you're interested to find out more, I will be staying back. We have also roped in some of our Cohort 2 participants to kind of address some questions. If you have interest to learn more, because there's only so much I can say. I thought you probably might want to hear directly from them. Okay, so thank you very much. Wishing you guys a very happy Friday. If you want to learn more, stay with us. I'm going to stay around for the next 15 to 30 minutes. Otherwise, have a wonderful weekend, and thank you so much to our esteemed panelists and facilitator again. Please do make sure you fill out the exit poll before you pop off, if you're popping off, okay? Thank you. So I will just pause here for a short while you get busy filling out the exit polls. And we will start our next segment probably in a minute or 2. Okay, thank you, Emmy. Okay, we still have, not too bad. We do have quite a room full left. I'm kind of seeing, let me see, we have, wow, close to 50. Not too bad. So I presume you guys are kind of staying on because you are interested to find out a little bit more about the program. So just giving you guys maybe just 10 seconds more to fill out the exit poll, and I'll just go into a bit more details. So far, I've seen that there's about 10 people who are interested in the program as a social entrepreneur, and then probably another 3 more. But I see about 3 who says that you're interested to be a mentor or a coach or an advisor, and I see about 4 who says that you actually know of a social enterprise that will benefit from SETH. So appreciate if you can give us a bit, or actually we would follow up with you, and we will appreciate if you can forward the relevant information to your friends or your contacts. Okay. All right. I will begin the next segment. Let me start by sharing with you how SETH is different, okay, from any other program. First and foremost, we have 4 different main differentiators. The first one is we are a lot more action-oriented. Our mantra is less content, more action. Now, of course, some of our workshop trainers may be a lot more generous in terms of sharing their content, but we always say it's not how much is imparted, it's how much you can take away. And I can assure you, all our trainers are people who are themselves practitioners. In fact, it is no secret that all our workshop trainers are involved in startups one way or another. Either they have mentored, or they have been part of a startup, or they've been part of a social enterprise. And a portion of them, although they are a bit more secretive, are actually investors themselves. So you are definitely exposed to people who are practitioners. They are not academics per se, and they are very involved either in the startup scene, or social enterprise scene, or as investors themselves. Second differentiator, we are by default a very high touch program. And when we say we want to provide structured expertise support, what exactly is this structure looking like? We actually divide our support into 3. So first and foremost, we have a business mentor. We assign you to a business mentor who is actually, as much as we can, someone who is actually familiar with your type of business, your industry vertical. So if you're in agriculture, we try to pair you up with someone who actually understands agriculture, or maybe even a very specific area of agriculture, as much as we can. And sometimes we might, no promises, even be able to match you with someone geographically in your area. Okay. Now, aside from your business mentorship, we also have another layer of specialist advisors. A fair bit of these guys also double up as our workshop trainers. And these are people who are a lot more experienced in cross-industry functions. So for example, finance, legal, marketing, HR, sales. So these are the folks who really understands this very specific operational area. So if this is one area you need help on, these are the folks who can help you with that. But we also have a secret weapon, which is the coaching layer. Now, the coach is not as interested in the business or the enterprise as he or she is on the entrepreneur. Because we are, like we said, the entrepreneurs are really the driving force behind the social enterprise. So we want to be able to help the entrepreneurs to reinvigorate them and help them with their personal development and their vision, mission planning. The third one, and this is the part sometimes I do hesitate to share, but it is who we are. We are very high touch as a team, right? Aside from the 3 layers that we mentioned, we also have assigned relationship managers to each of the social enterprises, because we understand that it is all a relationship. So the SETH program, although we market it as a program, effectively we are welcoming you into a community. You have social entrepreneurs, you have investors, you have people who are passionate in contributing to impact, and this is how it all manifests itself. And it's not uncommon at all for participants to collaborate amongst themselves. We have seen that happening in Cohort 1, we are seeing that happening in Cohort 2, and we are absolutely confident it will happen in Cohort 3. Last but not least, as we said, we have real investors who are involved as panelists, as workshop trainers, sometimes as mentors, and we have been very intentional in engaging these people as early as possible in that process. For the very same reason Mason mentioned, it does take 6 to 9 months for you to get to know the investors better, and vice versa. So this is what really this is something we are very intentional in doing, and we want to make sure that that the whole relationship happens. Okay. Of course, typical program like this, you will be pitching to a panel of investors, provided you meet our cut, meaning that we will not be recommending social enterprises as investment project, as investment pipeline that we feel we ourselves will not invest in. So this is something that we are very intentional in doing. Okay, I'm going to skip through all this. As you can imagine, because of COVID, almost unless something changed in the year, most of our program will be delivered virtually. I'm going to skip through all these details, which you can download later on. But we do have a very impressive panel of trainers who are walking us through month on month, and towards the last 2 months, it could get up to 3 times a week. So it is intense. So this is not for people who just want to attend another program for education. This is for people who are serious in being investment readiness. And of course, this is where our second cohort is in right now, really at the pitch coaching investment pitch refinement stage. So we have 2 coaches, one really to talk about their full 5-minute presentation, and the other one just to refine even the elevator pitches. Okay, just 2 more slides, just bear with me. The sign up details, the sign up link is there, and Bernice, if you can just help me paste that in the chat. It's already on, so do join us. There is a program fee, we need to let you know, and you may be asking, why is there a program fee? Very simple. Experience have taught us that if there is no commitment, there is no obligation. Okay, so if this program is given away for free, the dropout rate is going to be extremely high, and this is a highly subsidized program. Trust us, USD $1,000 is not even enough to cover not even 20% of how much this whole program actually costs. So we want to make sure that you are committed to this. It's like gym membership, right? Why would someone go and pay for an external gym membership when they already have a gym in their condo? It's the same mindset. We want to make sure you're committed. Okay. Of course, we expect you to commit to all our workshops, all our mentoring, advisory, and coaching session. And again, we cannot help but stress you must be actually serious in wanting to want to raise external investment. All right, so I'm going to pause here and take any questions that you might have. Oh, thank you so much, Ida. I see one of our current participants have said that it's value for money. Okay, any questions that you guys may have so far? I know all your videos are off and all of you are muted, but if you have any questions, I think we can even skip the chat box and you can ask your questions direct. Okay, while warming this group up a little bit, maybe I can just have 2 persons from our current program. Maybe I'll just check with Michelle if you have anything to share about our your experience so far. Sorry, I think I kind of caught you by surprise.
Yes, didn't expect to be the first one called. I really want to thank you guys for having this program. I joined another sort of like program earlier, which was to help me raise funds. But the high touch and I think the commitment that you guys gave and the practical advice, especially during this time where the COVID is, and we really need to get back to the drawing board and rethink our strategy, even whatever worked in the past, we need to like relearn and review. This was invaluable, and I truly recommend anyone to do that. And for me, I'm not like a young entrepreneur. I've got like 30 over years of work experience and all. And yeah, I think this is really a good value for money. Truly, thank you guys from the bottom of my heart.
Thank you, Michelle. We can only go so far as how you guys would appreciate your feedback, right? In fact, just very you're gonna laugh at this. Just this morning, I was just texting Bernice, and I'm like, I'm feeling a little bit unprepared to launch SETH Cohort 3 because we know that, oh boy, we are going to run this whole thing again. And every cohort is always a surprise, right? Just when we are like, we are not sure whether we can repeat some of the miracles we had in the previous cohort, our participants continue to surprise us again and again and again. So just today, I'm going to share with you guys, this is going to be funny. I literally received a thank you gift from one of the programs that I mentored, right? Just kind of help out a little bit, right? And I got this very nice t-shirt, okay? And to my absolute surprise, this t-shirt was actually printed or made by Liberty Society, which is a SETH Cohort 1 participant. It just warms my heart to know that this program has made a difference. And somehow these guys are telling us, these guys are based in Indonesia, but they're saying now Singapore is their largest market. So yeah, we are very, very grateful to you guys as well for helping us bring this program so far. Craig, I saw that you unmuted yourself a little bit. You have something to share?
Yeah, I've been in this latest cohort and really benefited from it greatly. The emphasis on the social impact and for social entrepreneurs has really made it very specific for our needs. I'm based in the Philippines, and we've been doing a lot of R&D to get to the point where we are now, and now we're launching commercially. And as was said earlier, the trainers are actual practitioners, and it makes such a difference because they know what they're looking for. They know what other investors are looking for example, what mistakes entrepreneurs make, social entrepreneurs, as we were hearing earlier. It's not coming out of a theory book or anything like that. And so the materials that are given really hit the nail on the head for us. They're focused. There's not too much. It's just, I think, in content about right. The high touch means that you get a lot of support from, as was mentioned, as Wayne was saying, the mentor, and even just getting the right mentor for your industry and your particular needs, the coaches, and that emphasis on the entrepreneurs as individuals. That's really quite unusual, and having a networker, someone who can come along and link you up with people, the whole thing has been really invaluable for us. And I would say one of the things that stands out for me is the meeting investors, potential social impact investors, early on, right from the first stage. We were introduced, people were coming alongside, so that it's not a case of, oh, we'll get you investor ready and then you'll pitch to a room full of strangers. As was said, it's 6-9 months of getting to know people, and they are sort of peering over the fence. How are you getting on? We can continue those conversations as we're doing the learning and building up our business ready for it. So that has been super for us, and this has been one of the best decisions I've made to join that course. I can really recommend it.
Thank you so much, Craig. I think, Craig, you mentioned one point very important, which is being introduced to investors right at the start. So just letting everyone know that for the program fee, I won't name names, but we do also have companies whereby they are sponsored by prospective investors. Because what happens is that the investors kind of see this as a very low risk due diligence for them. Because at the end of the program, they get to ask the relationship managers, like, what do you think of the entrepreneurs? They get to speak to the mentors to say that you have deep dive into their financials, you have deep dive into their business model. What do you think? And it's such a low risk due diligence investment for them. And we spend 6 to 9 months making friends with the social entrepreneurs, and you kind of have a very accelerated path, right? So that's also one of our value add to the whole ecosystem, because if you actually know how much it costs to conduct a due diligence on an prospective investment, anywhere, depending on which market you are in, you still cannot go deep down below 30,000 USD. I kid you not. I went through the whole process before myself. I kind of know the moment, and some of these guys insist that you must bring in one of the big fours. Then the price shoots up even more, right? So by the time you have to bring in the auditors, it already means that the deal is almost, they're almost assured that they want to go deep into the relationship. So this is again one of those programs that we structured. It's a process, right, to kind of help you to get to know your investors better, your portfolio companies better. Okay, Ida, I think I'm going to have you up, but before I do that, I just want to answer one of Barbara's questions. She's saying that you're not sure, she's not sure whether they qualify because they are an NGO, right? Well, Barbara, I have news for you. In our previous cohorts, we have not one, but actually two non-profit social enterprises that were part of a non-profit. We are agnostic to your legal entity, as long as we know that you actually want to spin this out as a business and subsequently do raise funds. Then the real question is that does your vehicle support that? Is that intentional? Now we understand there is a gestation period. If you want to spin off a social enterprise under a non-profit, it is not, depending on which country you're in, it could be a little bit complicated. But if this is something you really want to do, we are happy to support you in the process as well. Hope that answers your question. Okay, Ida, would you like to share your experience?
Yes, sure. It was very fruitful because me from Eaglepreneur, we are a very young company still. And I felt like two things came out from my experience here in SETH. One is, as an entrepreneur, there's always so many things to look at. And you think that, okay, you know the basic, but there's so much more, especially when it comes to finance. And what's nice about SETH is that one thing's very valuable, that they bring in the tools for you to ease it up. So eventually during the workshops, there are things like you learn the viral framework, like what is that? But then it totally makes sense, and they provide like toolkit together with Raise to help you, streamline how to actually organize everything and all your statements. That's a very value added. And second, I felt like they were able to provide like a perspective from our social enterprise that we didn't think, because the mentors, the people, the team, they know the landscape very, very well. So one of the issues that we didn't think about is, for example, that as a social enterprise, there must be a balance between the social impact and also finding the sales to sustain us. So it really led us to focus our goals so much more this year. And every time we have a workshop, we implement and it works. And the way they've structured it is quite organized, that it follows through one another. So like recently we did B2B sales, and then the next problem came was we need to learn about HR. So it was like properly structured, and it was a very fruitful experience. You do need a lot of time though, because you do have to get to the bottom and get things done. So you must be committed to. That's all I have to say.
Thank you, Ida. Well, another confession, guys. Let me just be very upfront. Our content, 90% of it you can find online. Okay, so let me just put it out there first. So then, what is so different? As with all consultants, we can show you the tool, we can point you to the framework, but the value add is when the consultants help you implement it and contextualize it within your business, right? Within the context of your framework, your business, and how it's relevant to you. So business model canvas, you can find plenty of those online, talking about marketing, sales, HR. Trust me, you can find very good materials on YouTube these days, right? But what is really valuable is when you get to talk to someone who can really say that, I think this is how you should apply it in your business this way, and you have questions that you can ask and you have a real human replying you, right? So it's the high touch people relationship driven model that we believe is what sets SETH and TBN Asia apart.
I'd like to add to that. I think the tools are all available everywhere, but the key is that you guys have curated the ones that are most suitable for us, and that filters out, like, you know, I can't be doing a million tools and finding out which one is the good one. You really have gotten the best practices or the best tools and then guided us through. So that integration of the best tools is a value add as well.
Oh, thank you, Michelle. You're so kind. Again, just letting everyone know that this is also based on a lot of iterative feedback. Between cohort 1 and cohort 2, we ditched about half of our content. We redid about half of our content. Well, for two reasons, right? One, because of COVID. This was originally an offline program, very targeted at Indonesia, but because of COVID, we took it online. We expanded this regionally. And then two is that when we also realized that the social enterprises needs can vary cohort to cohort. So the profile of companies in cohort 2 is actually quite different from the profile of companies in cohort 1. So we also want to understand what works best for this cohort. Like we say, it's high touch. It's not very scalable, to be honest, at least at the start. But we are heartened to see that we are gaining traction, and your feedback is very helpful. Yeah. And just to let everyone know, our three entrepreneurs who just shared, Michelle is based in Singapore, Craig is based in Philippines, and Ida is actually based in Malaysia. So this is what we mean by ASEAN as a regional focus. Fortunately, because this is a virtual program, the whole thing can be taken online, and we can expand our geographical reach. So if this is a program for you or for one of your friends, because you know, like, okay, this guy, my good friend, would definitely benefit from this program or from this bunch of crazy people called TBN Asia, please let us know, reach out to us. You can sign up directly, of course, but if you want to forward some materials to your friends, reach out to us and we will follow up with you. Okay. Any more questions before we close? All right. Well, if not, it is 6:27. Thank you so much for your time. Just conscious that it is a Friday night after all. So thank you guys so much. And I want to also thank Michelle, Craig, and Ida for their generous sharing. It was very spontaneous. As you can see, we kind of took Michelle off by surprise. So looking forward to hearing from you guys. Okay. Wishing you guys a very good weekend. Have a good night. And we hope to hear from you soon. Take care. Bye.